Hey everyone, welcome to Thanksgiving special. We're gonna today look into three questions. What's going on in markets? What's up with MSTR and their convertible bonds? And what positions maybe we can think about from that? Maybe even a user question about Standard Oil. So let's look today at markets real quick. Gonna go to Bloomberg. AI doomerism on the front page. Americans don't have good health care. This is not news. Let's look at markets. Come on. How's S&P doing? Okay. Start with election, rally, doing okay. At the highs, bonds rally because of Bassett, the Soros guy. How about the dollar? So you see bonds up, stocks up, asset prices up, dollar down. That's good. That's good. Let's go look at SOFR. SOFR December. This is what they think interest rates are going to be. 100 minus this, so a little bit more easing. Not that much, though. Let's look at 2026. Think about diffing these, playing the rate of change in interest rates. Let's do that. Historical spread. So for Z7, SF, sorry guys, it's been a while. Let's look at the diff. Come on. Sometimes my computer's a little hostile environment. Don't trust machines. Okay, so what do we got? The white line is end of next year. Orange line is the year after that. Pretty constant, but they're saying more easing later, which you can see happened here as well. So from April to August, market started pricing in a lot of easing, but to the back end first, which is weird. So let's go to the yield curve, IYC. And then they're going to tell me to find the new curve finder or whatever it is, CCRV. Thanks, Bloomberg. Come on, let's go. That's why we have music. Okay, come on. CCRV. Sometimes it doesn't like it when you go too fast. This is our wait music. There we go. Okay, but then beautiful, right? Let's take a look. Okay, let's do 1 year. And before you really understand the chart, just try to take it all in and think about where you were back in 2023, where you were in 2020, 2019, right? So in 2019, we were bopping along, 2% interest rates. Everyone thought that was going to be great, right? Let's add a date in between. Let's add right after COVID. So let's go 06, 05. And you guys can think about this as training and how to use these tools. kidding, but I'm not. This is what they teach you at the big banks. Okay. Yep. So, I mean, you want to flip this because it's really 100 minus this gives you your interest rate. That's what they call it a future. It's how they do the math. Don't ask why. It's a long story. So COVID happens, right? Interest rates go down across the curve because it was so flat, right? So you imagine that somewhere between here and here, this is the front end, right? This curve had to go womp, right? And the front had to go way down, and that was the tightening. So if we do another one, and let's go from 2020, and let's do 2022, right? 06, 15, 22. We're going to see that curve. I mean, it's the front end coming up a ton. There you go, boom. And you can see the whole way down, people are still kind of not believing it's going to happen. So let's take a minute and actually go look at some data around this, aside from this stuff. Let's look at the yield curve against history. And let's compare it to some other stuff. But first of all, let's see how it works. So when you see yield curve, boom, inverted, what that's telling you, let's do modern era, just so people don't get too in the wobbles, okay? This is saying that that front end is hitting up against the long end. Let's make this smaller and actually show this. I'm about to close Bloomberg because it's making the stream super slow, but hopefully you guys can watch this on high speed, or the robot will do it. Okay. So what are we looking for? We're looking for how the shape of this line moves around and where we are in that process. So, right, let's ignore the old history for a second. This is the free banking era. You can see what that means about free banking, right? Lots of short-term volatility and short-term interest rates. Okay, zoom in, zoom in, zoom in. And this is the story that makes sense, which is basically for Greenspan, every time something bad happened, this blue line, thump, 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 kept going down, 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 down. And that dragged the long rate down, okay? And that's what these are, is you flip it, where it's the long rate minus short rate, but these big moves up in what's called the yield curve. You could call this yield curve instead of YC candle. Okay, same thing, I just know the codes. It's a short rate and long rate. Those are easing periods. So let's flip this. Compare it to, I don't know, USA stocks year over year, which are kind of growthy, but not entirely growth. We can look at growth in a second. Why are we doing all this? We're doing this because we want to understand, what's happening here? Short rate's coming back to the long end. It's getting flat. Are we going through or what? And that's the question everyone's asking fixed income markets. And that's why we look at bond prices every day, because you want to see what the market is pricing in of that blue line. Okay, so yeah, you see stocks crash and the yield curve steepens. That's kind of what this shows, even though it's a bit of a mess. So go back to Bloomberg. Okay, you got these curves, right? And reason the dollar's going up so much, this is where macro becomes about other people, is, well, let's go look at what's in the dollar. If Bloomberg wants to work for me, okay, with me. Let's pull up our own version too, while it's thinking. We're going to look at the dollar. And let's go back over here and look at what's in the dollar. Still thinking. Okay, same chart, good. You can MEMB for members. Come on. Long way of saying it's the euro. Okay. Because when they put this thing together, when you think about GDPs, let's ask GPT. What is the breakdown? Okay, what do we think? We'll get it? I think it'll do decent. It'll find one from like 2022 or something. Boom. Wikipedia. Okay, so who knows if that's up to date, but 56% euro. What's the euro? Well, euro is Germany, France. How are those guys doing? Whether you like it or not, this is macro. Just jump, 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 jump. Because if you're thinking about the dollar, you need to think about 2-year forward interest rates. That's what they're competing against. Well, where can those cash flows go? They can go to Germany, they can go to France, they can go to the UK or Japan. They're not going to go to North Korea, right? So when you're thinking about who short-term dollar flows are going to, you're usually talking about capital markets, which usually means bank accounts. Bank accounts are linked to sovereigns. So let's go look at the conditions in these different countries. Let's look for growth, maybe industrial production. And that's within these surveys, which we'll show you in a second. Okay, a lot of data, but you can see we're not in disaster times. It looks pretty good. It looks pretty good, and yet all we can see is bad news on Germany. Oh, that's a mistake. Okay, well, that's a time series aggregation problem. So let's solve that on stream. Oh man, okay. Let's do it. Good thing nice. Oh boy. Good thing my video card's really participating here. Didn't want to pull that. Oh, come on. Anyway, it's fine. You can kind of get a sense of it. I don't want to blow up 20 minutes cleaning a stupid table. I can do that later. So let's look at growth. Germany's not doing great. Let's look at the things in this, and we'll clean it up later. Good example of why we need rows to do the cleaning. So anyway, unemployment rate, PMIs, consumer confidence. This is actually going to be about Germany. That's okay. We'll write up about Germany. That one's not going to be updated. Okay. Zoom down, zoom down, zoom down. What do we got? Okay, unemployment is ticking up. All right, slow down here, everybody. Let's look at Germany. So unemployment rate clocking in at 4.5, but still not that bad. Consumer confidence is recovering, although pretty weak. I mean, that's not good. That's like normally a recession. So we had this really bad time right after COVID. PMIs need to be updated. Try to do that now. This is going to require Excel computers, so you're just going to have to deal with it. Look at this. See, I mean, I'm not paranoid here. There's definitely people on my computer. Look at this. Okay, let's do a new one. Bloop, bloop, bloop. Okay. Try to send. And let's do DU and prod. Industrial production. Nope, prod. Windows update. Can't stop us. Oh, I can try. Come on, computer. I know, this is, I tried desktops, but it doesn't work. And then you're, fighting yourself too. So, what do you guys want from me? Computers always break. Okay, but this is going to be interesting. So we're going to try to figure out what's up with this Germany thing, which is going to drive our dollar view, right? And the reason we care about dollar, to kind of zoom back up, is because today we're talking about MSTR, we're talking about Bitcoin, we're talking about gold and silver as different ways to bet on the same thing. So take out these two for a second. Start here. Okay, looks like silver's a dog, man. I like it though. Like, silver to gold ratio. You're probably going to be there's only 10 times more silver on Earth as gold. You can use it in solar panels. Solar panels need silver. And gold is about 80 times more valuable. Yeah, and you can invert that, but 0.026 or whatever it is, right? So today we're going to think about that as the same problem, but with these two guys. MSTR, div, BTC. Because that's what's going on in markets. And I haven't looked at this yet. So this is, live on stream or whatever. But today we're going to try to figure out how to go from that backdrop. Okay, dollar's easing. Maybe the tariffs are going to strengthen the dollar, but not in a super inflationary way. Well, who knows? And then what's going on with this MSTR thing? I'm not up on it. I don't know if you guys are up on it. So first of all, let's just try to figure out what's up with this convertible bond. So what is a convertible bond? Convert. Here we go. Well, I give you $100 today. Let's see how long this takes. And then if that takes too long, I'm going to have to tap out here, guys, because this computer situation is just not good for you. It's not good for me. But the bond, let's just look at it really quickly if we can. Don't let the machines get you down. Just power through music. So these are only to qualified institutional buyers, right? This is to non-punters, as we'll call it. Okay, this will be important later. This is why the whole thing exists, because they are financing debt from smart people and selling shares to people who are constrained, where they can't buy this stuff and they also can't buy enough Bitcoin because they don't have good pipes to do it. So these guys offered $3 billion, okay? And it closes on November, so it already closed. Okay, it's really a Deck 1 2029. So let's just put that in our spreadsheet for a second. If the spreadsheet will participate. And this is maybe where we'll kill Bloomberg, but we might need it in a minute. So that's why I'm keeping this going. Oops, okay, so it's 12/1/2029. Right? And this is the premium. Okay. Oh boy. So why don't we do time from today? Equals today. This is why Microsoft Excel will never go anywhere. Okay. Really should close Bloomberg. That's really slowing me down here. Okay. Equals this minus that divided by 365-ish. Okay. And then it didn't even do it right. Yeah. Okay. Clicked. This is where the mouse comes in. Okay. So what are interest rates for 5-year debt? Well, this is where we need Bloomberg, right? Because we're going to actually price this thing. So it depends on your bond, but let's look for the US 5-year. Why not? Risk-free, right? I just picked the generic. This is probably a little bit worse than you can find in the futures market. Better depends on the basis spread. Let's not get into basis spread today. Oh, this music got weird. Okay, next. This is why I did the music. Because the computers, man. Okay, 4.0482. Great, let's use that. Come on. 4.4? No, 4.82. Equals 1 divided by 1 plus 0.405. Okay, that's per year. We're going to go real slow here because we don't want the computers to get too mad at us. Not perf, it's the DCF per year is kind of a way of thinking about it, and then it messes up the D versus the, yeah, okay. But the discounted cash flow per year, meaning every year it gets 4% less. Now we take this to the power of how many years? 5.05. I mean, it's really going to be 5, but this is just for the academic nature of it. 80, okay. So that means that today you're spending $80 on the bond. We're going straight to convert world, and we'll try to talk about what a convert is in a second. This is kind of for a write-up, so we're going backwards. Okay, so $80 is the premium. Not the premium, is the principal, the way to think about it. And then the optionality buy, right? And this is where it's going to get complicated because we're not just trading shares, we're trading options on shares. You know, this notion of, is it gamma or is it alpha? Okay. Equals. I might have to kill Bloomberg. This is excruciatingly painful. This is also why my company exists. Okay. $20 of optionality. $18 of optionality. Okay, so how many Bitcoins do I get for my $20? Right? This is saying, hey, I'm going to give you $100. Okay, last sale price of Class A common stock has been at least 130% of the conversion price. Then in effect for specific terms of the date of notice. If Microsoft redeems fewer than the outstanding notes, at least 75 million principal of the amount of notes must be outstanding and not subject to redemption. So they're saying we can't redeem all of the notes. We need to have enough notes outstanding to make a liquid market in this bond, which kind of makes sense, I think. Who and how we decide who those 75 million are is the question. Holders of notes may require MicroStrategy purchase for cash all of their notes on, this is a callable fundamental change under the indenture governing the notes and reach purchase price equal to 100% of principal. This is callable, plus any accrued unpaid interest. May require MicroStrategy to repurchase for cash. So that's weird. There's a weird option in here that I don't understand. So you write this down, right? Which is, there's some sort of callable nature to this thing. And this is, again, maybe we need Bloomberg because they have like little things you can do to track how much this stuff costs. Calling it back means that they can get the bond back. Now, if the bond is really valuable all of a sudden and they can just get it back, you don't actually have that option. So I need to understand this a lot more, and the world does too, maybe, unless I'm just being an idiot. So, in contention with certain corporate events, calls for any redemption at will under certain circumstances be required to increase the conversion rate. Okay. For holders who elect to convert their notes in connection with some corporate events or notes redemption. This means if they call you, they're going to re-up you in the conversion rate under certain circumstances, be required to. I mean, this is probably the option of the bondholder saying, you can't screw me over, but okay. Well, okay, cash, shares, or combination prior to June 1, the notes will be convertible only upon the occurrence. Yeah, that's like if they really blow up or they get bought out. The conversion rate for will be 1 point. Here we go. Boom. Finally. Okay. So they're saying that this is the strike. Come on, computer. Leaving, we had like a 500-page spreadsheet, so let's not get too stressed about that. So 50% up, right? Okay, yep. This is weird. Okay. Conversion price of 600 per share. They're saying that this is kind of how we priced it, but the stock was moving around while we were doing this, probably, so it's kind of a mess, which makes sense. These are not easy to do. That's why banks exist. Even though they hate me sometimes. Ha ha ha. Okay. This is the share price. This is the conversion. Converge. The bond price is actually 1,000. So we'll go here. But this is where it gets confusing because all these numbers down here, the 80 and the 20, are now 800 and 180. But let's not get too hung up on it for a second, just because let's keep it at 100, because they're quoting in 1.4s and 130% and stuff. And so, 55%. Okay, so they're saying this is how much. That's a premium of 55% over our existing shares. Now, again, we're going to have to do all this math at a certain point, which is why I'm dumping it all here. And that's when we'll turn off the Bloomberg. So it's not excruciatingly painful, but at this point, we're just trying to track the things in a sheet. First step, okay, just look at the thing itself. Okay, so their net proceeds are $3 billion. Yeah, acquire Bitcoin directly into Bitcoin, right? So today's Bitcoin price or whatever, that's an important thing. Okay, so we're just going to use GPT first, and then when we escalate out of GPT, we'll start into using Rose and Bloomberg and all that stuff. But we're going to see how far we can get just with OpenAI's, out of the box thing, because that's what everyone has access to. Oh, start a new one. How many Bitcoin does MSTR have? Keep in mind, I have not looked at this thing at all, guys. So I'm coming in very underexposed. Okay, so as of November 25th, 5 days ago, this stuff will start to matter pretty soon. Oof. Okay, they're just dumping information on me, understand? Okay, I just need that one number. Let's go. Come on. They had. And you want to track your links here because this stuff. Okay. That's from these guys. Okay, yep. They have 380,000. Oops, okay. Nice. Okay, good job, these guys. Bitbo. Use Bitbo, guys. Get that data. They have 380. Come on, don't do that to me. I just was being nice to you. Okay. Don't do that to me. We were just talking about this. Okay, let's get out of here. They're on to us. Okay. But a couple days ago, so let's make sure we don't get confused. They had 279,420. 279,420. 279,420. And that was November 11th. 11/11/24. And they're saying average price. I don't know how they get price necessarily, but okay. Oh, that looks useful. Now we're going to scoop this data. Thank you, Bitbo. Oh, man. See how copy paste works. Oh my God, it worked. Okay. Let's resort it from top to bottom, bottom to top. Time goes down because it's infinity. If you want to think of it that way, it goes backwards infinity, but don't start your database. Oh man, that way. Now we gotta, this is manual. Sorry. Just really toying with the gods here. You can tell the computer is straining against it. If you guys want to see, we're gonna in a minute go to my what's wrong? Maybe someone will tell me. Come on, man. And then you see that I'm actually pretty good at this thing. Here, I can show you what we're working with. This is what's killing our computer. It's not that much. I mean, Chrome, I don't think I have 37 tabs, but I have rows open, which can be expensive, but it's not that expensive right now. Okay. Let's go back to Excel. I gotta close Bloomberg, guys. This is just too much. All right, let's hope the data is updated. Sorry, BBG. You're killing my vibe here. Okay, now let's watch the stuff go down. Maybe we'll cut it here and then people can just see it for back history when it starts going fast. Because I gotta do some manual stuff right now. Still there. We've asked it to leave politely. They'll believe me when I say the computers are. Yes, I would like to exit the Bloomberg. Okay, now watch as the computer magically goes a million times faster. Once this is banished from our system. I mean, streaming is heavy, but this has 64 gigs of RAM. This is not a toy computer. This is a real computer. Loom, get out of there. Maybe it's Loom. I can start killing stuff too. That will probably help. Service host. That's probably. This is my mouse. Edge. Edge is so sneaky. I don't know what Edge is doing. I'm not even looking at Edge. Okay, how we doing? Still slow though. Anyway, you guys know what that should feel like. Okay. So this thing is pretty good, although I think it has ranges. Don't range me, bro. That's horrible. Okay, so we have to get these ranges because like it's just messy, but it's as of date. So you're like by the end of it, it's still freaking slow. Oh man, it's not Bloomberg. It must be OBS. The last computer I had that could run this is now overheated, so we'll see what we can do. Not a lot of budget to blow on computers right now. Fine tuning GPUs. People who can make GPUs run code. Okay, so what we're gonna do here is, first of all, get stupid currencies. So annoying when people do M and then V, right? Doesn't help you. It's making your life worse. So we're gonna have to fix that and say equals right one equals, right? And that's the unit. Okay. Now we're gonna have to strip that data. This is what people make you do all the time. No one cares, but equals left. Let's go len minus one. And that's gonna give us the stem number, right? Oh, don't go off on me too quick. Okay, that's the number. And then let's do if equals if this equals m, then multiply that by 1, 2, 3, 1, 2, 3, 1, 2, 3. If that equals, this is where the music helps, b, multiply it by 9 zeros, 1, 2, 3, 1, 2, 3, 1, 2, 3. This is how we do it, folks. I hate to tell you, but this is the universe that we live in. Okay, because we're going to be pushing all this stuff. Same thing for this one, which is total dollars spent. We'll make sure it works, but also needs one of these. And you can do this in one formula, but I don't recommend it, especially when you're doing it on stream, because you're going to mess it up. Or if you're like under observation, as we are with this computer. Okay. Okay, boom. And then this thing should rest on the right thing. Boom. Now this, funny. Gotta move them both over one because I didn't insert the right row. I could copy paste, but I'm not feeling charitable today. It's like a to-do. A to-do list is what we're doing today here, guys. Okay, copy this down, calculate, turn AutoCalc off. Okay, now let's make a clean table. This is date. Oops. Dude, even insert columns is slow. Like this is, I should change computers. I know. What a stream. We'll call this Don't Trust Machines, part 15. Okay. Alt IC, Alt IC, Alt IC, Alt IC. And then it goes great. Now you make your own columns. Okay? Don't use their columns. I'm gonna call this Alt row, Alt insert row. And we're gonna insert a ticker. It's all MSTR. And let's give it a string equals this dot B to the treasury, etc purchase, raw bitbo. What was this thing? We should probably put in a link, but we did. Let's find a link. These guys. Still slow. Turn off Slack. By Slack. Maybe that will help. Okay. Link. Oh. Okay. It's the rows. This is the link. It's just garbage data. Date. Okay. Clicking on tokens doesn't work. Kind of confusing, but we'll just run with it and then get it out of Excel because Excel is part of the problem right now. Okay. Gotta get these. Go. We're gonna push this data with these dates. Get it into rows. Hands up. Don't break it. Come on, bro. This is getting silly. That's not roast. That's the computer. Contractor computer. Let's just look at this stuff before we go. Guys, we'll come back after we ponder this a bit.